This conference will now be recorded.
Good morning, ladies and gentlemen. This is Frank, Clueless A Trading, founder and head trader, as I like to call myself. Of course, I'm a head trader. I'm the one who's only one trading at Clueless A Trading, as in delivering the content. Um, Today is July 14th, 2019, approximately 10:10 a.m. Eastern Standard Time on an absolutely spectacular New York City, New Jersey waterfront in this area. Still a little bit sleepy, but let us begin. Full disclosure, this is purely for financial education, not for any solicitation or advice. And we have a fantastic bunch of newer members here. We have Jill, we have Mike, we have Nazir, we have Serge, and I believe one of our other members is going to join us very soon. Okay, on that note, today's session is really geared towards covering a bunch of mid-level basics, and most importantly, answering your questions on things that you would like to be a little bit more skilled at. And that's really what it's all about. Okay. So it's going to be an open forum, not any one particular specific topic. But let me make a couple of opening comments. First of all, you guys know what's going on in the market. The markets are making new highs. They keep on making new highs. I've been talking about this for months. I've been talking about it for weeks. I've been talking about it for days. Now, here's the good news and here's the bad news. The good news is there's still room to move, because if you look around as people who are involved in the in investing and trading in the financial markets, not all stocks are making 52-week highs. There are great stocks, so many of them that we trade, like Boeing, like Nvidia, um, and many others, which are far, far away from their 12-month or all-time highs. Forget about 52 weeks from their all-time highs. So there's room to move. Look at companies like Square, which we're doing extremely well on. So it's not like the markets make new highs and people out there who are spectators of the US stock market and never want to get involved, their involvement is primarily through their 401ks and their pension funds and such. But they're never really involved on a personal basis with the stock markets. They think, oh, market's making new highs, making new highs. You know, we're already up there. Um, Everything is making new highs. They're not. So as traders, and specifically as a very skilled category of traders, what we call tactical trading, that's really what we do here. Um, there's a lot of opportunity still left. I'm going to be covering some very important stuff at tonight's webinar, which is the standard weekly update at around 8:30 p.m. Eastern time. And if you guys can attend, I think it'll be worth your time, because information and tools and everything that I show and provide and share generously with all of you every single day, trades and such, um, these things are real um, money making tools. So bottom line is we are so the good news is there is still room to move. The bad news is that a lot of traders, and I'm not saying ours, but traders out there, are just still sitting around and are not really pushing the pedal to the metal on fast moving, powerful companies that are having major long-term significant breakouts, like the healthcare companies that I kept on talking about for months, if not the past, and for weeks. United Health, Anthem Health, Humana. So the bad news is that the longer you sit around waiting for some mythical perfect moment, which come almost every week, you get those 400-500 point drops. As a long bias trader, which we are primarily at, I'm not a short bias trader. Yes, I'll short the market on an intraday or overnight basis, but I'm certainly not an intermediate or long-term short yet. The fact is that the longer people are not really making this window of opportunity that's been in front of us for a while now, back and forth, we are reaching that level, give or take maybe a month or so, or maybe a little bit longer, where the market is going to make a substantial top. And what does that mean? That simply means that the market is going to get very nasty. And hey, this is my profession. This is in my blood. I'm going to make money. I'm going to short the market. I'm going to take tactical longs when the market has those reflex bounces, 200, 300, 400 points. And everything since 2018, when the market really cracked in January 2018, the market dropped a couple of thousand points, if you all remember. And we still managed to squeak out some money in between taking some hits. Has taught me how to handle volatility like a trainer can handle wild animals or a wild lion. Okay, seriously. So what I used to be scared about, like, oh my God, these technical setups and stuff now are all broken stuff. I tell myself over and over again, and that's why we're so accurate in what we do, that there's nothing to fear. We can switch positions, we can take a hit here and there, and we'll make back twice that or 3 times that on some other trades. Is it easy? No. Is it that hard? No. So that's basically the whole picture here, guys. And I'm going to be talking about some of the longer term picture, obviously, tonight. So starting with that, one of the things that I want to highlight before I take your questions, and please have certain questions in your head, because I don't think any of us, including myself, are really at peak performance. I mean, yes, I do well. Am I doing what my potential is on the type of things that I'm delivering? Nope. So I constantly try to keep on improving myself, and I hope that all of you do too. So saying all that, the key is to basically improve on the stuff that you are weak at. That's what I keep on focusing on myself. Why am I selling things too early? Why am I not getting a 4,000 plus return on an Amazon call that I delivered? Why am I only taking 400-500% when it's going up almost 2,000%? Look at the Amazon calls from last week. They went from 6 to 60. I think they went to 70. I mean, just think about that for a minute. You put $6,000, you'd be taking $70,000. Now, along the way, it chopped its way up, but it was bang, 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 4 days. But I don't think any of us did that. I mean, I took, I was mostly out in the high teens. And then I rolled into some cheaper ones, which I, again, made some very decent money, and I sold out, and it just kept on going. And Amazon's going to make a new high and probably blow through it. Okay, so let's look at how, and these are things you guys have to concentrate in. You guys got to get friends. You got to literally, like they say, and don't take me the wrong way, make love to the to tactical charts. Okay, make them your girlfriend, boyfriend, whatever it is, because these charts are just frigging amazing. I mean, look how mathematically precise they're drawn. Look, I don't control the market. I don't control the candles. Only thing I can do, I can structure them so it's easy to see. Really, I mean that. Easy to see where we can drop, where we can rise, how far things can go when things get, really heated up, as it's doing right now with the markets, and where it can drop when we get some negative news flashes and stuff that hit the market, whether it be an earnings miss or whether it, a tweet from President Trump or the Chinese government coming up with some hardcore trade comment, blah, blah, blah. So there we go. And every single day, I don't keep on switching around the charts. I stick to one, and then I will adapt it as things move to the extreme, on the upside or the downside. You all know that. So looking at this, for example, the starting point, the reference point, and this is key in technical analysis, as all of you know, you need to have contact points. You need to have reference points. Once you have a couple of waypoints, like they say, if anyone has ever played a flying game, I don't fly, but I have friends who are pilots in the U.S. Air Force. And once you have the waypoints, then you can construct the lines. You just can randomly draw lines and say, okay, that's that, it's going to suit my purpose. So this reference point started on the 9th. What day was the 9th? The 9th was Tuesday, last Tuesday. Now we can always go back and keep on going back and drawing it out, but I am looking to see the market made a substantial bottom on Tuesday. So from that point on, let's map it out and see what it can do. And this is what it did. These were the Powell, and I walked you guys all through it. Everyone should listen to the Sunday webinars if they can attend it, because I walked through people. I said this is going to be a critical week. You have Fed Powell, which I have, extremely smart gentleman, Federal Reserve chairman, but there's many other Fed speakers, and obviously this was Monday morning. This is Wednesday. So always focus on number one. Going back to basics, always focus on the charts. The lines are there. If you're an active trader, these charts can make you a very decent sum of money during the day with small amounts of money. If you're a swing trader, you want to keep an eye on this, because just in case some of these levels break, then you want to minimize your position sizing, whatever you have on the front side. Not on everything, not on those biotech type of swing trades and stuff, which take weeks, if not months, to develop, and then they just take off like a rocket. But on the SPYs and things which move directly with the market. So let's look at the next one. So here is another one where I drew the actual patterns on it, like I always do, but going all the way back to August of last year. This is Sarepta. Now, we don't know if Sarepta is going to get bought out. There's a lot of talk about it. They're a very specialized biotech company working on Duchenne's, I think it's called, muscular dystrophy, which affects kids. Serious stuff. So looking back at it, you got falling wedges, you got channels, you got falling wedges again. Now, these are taking months to develop. And this is where we are. This, to me, is a very powerful pattern. So we've been trading this baby all the way since the 120s, and right now it is at 152. And you can clearly see what pattern this is. This is a very beautiful cup and handle. And which projects out very simply to 163, 157. Stock closed at, what is it, 156. So those couple of points, they make you money. $4 or $5. Hey, you got yourself, 40 to 60%. Biotech options move somewhat differently. They tend to be like an elastic band. They are not like the Netflixes and Apples and Facebooks, which move literally penny by penny. If you buy in the money, if you're a little bit out of the money, they move every 10 cents. As the stock moves every 10 cents, 25 cents, dollar, they have a very high degree of correlation. So delta, options delta, as they call it. With biotechs, it's different. You get in there to buy a call, the spreads could be from $2 on the bid side, it's probably like $4. So you got to work somewhere in the middle to get it. So it's a little bit frustrating, but nothing we can do about it. We're not the options market makers. And then as the stock is moving, they don't always move dollar to dollar. Then all of a sudden they just go bang. So they're really primarily, to be honest with you, not for day trades. These are really for swing traders. Patience. And it pays the bills. They're also held hostage to a lot of stuff that comes out on FDA approvals, health attacks on the U.S. healthcare by both Democrats and Republicans, drug price controls, blah, 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 everything. But again, let's talk about the technical part of it. So one of the biggest mistakes that we all do, and I'm sure you guys do it, too, is we forget to concentrate on the bigger picture. And we jump and squeal and do stupid things like sell out, and then we see the thing just take off like a rocket, and this happens all the time. That's the first thing that any trader tells me when I have my initial conversation with them when they join us. And I've heard it all. I've experienced it all. So there's nothing that a trader can tell me that is that unique where I say, wow, that's really the problem. No, because it's always the same things, obviously. So one of the biggest, that part of that critical mistake that we do all the time, whether it be stocks like Sarepta, whether it be Netflix, whether it be anything else out there, is we forget to keep it on the bigger picture, and we concentrate on every candle move, and the machines know exactly where to blast human traders. And these are the supercomputers, the algorithmic high frequency trading black boxes, which basically dominate overall trading in the market. They're unleashed by hedge funds, some institutional players, and some shops which are designed to do nothing but screw the market participants, i.e. traders primarily, by running very heavy, high volatility programs. So work on that. I keep on working on that myself. The only way you can work on it and reduce that level of anxiety and stupid trading moves, such as primarily selling out of a position before it just goes nuts, is to focus on the charts. That's the only way you are going to control your emotional errors. It just doesn't come naturally. Humans weren't designed to be tactical traders. Humans were designed to be happy when things are good and sad when things are bad. Well, it doesn't work like that in the market. You got to be happy when things look the roughest, and you got to be sad when you're selling something at the highs. And I shouldn't say you should be sad, but you should be you shouldn't be euphoric like as things are just running up. You got to be excited when things are giving you a bargain basement price based again on tactical charting. Just because something falls doesn't mean it can't fall more. So anyway, so again, let's try to focus of not being, especially on these type of swing charts, which there are quite a few, as you all know. Let's not focus on this particular noise that is happening daily. Remember, this is the daily charts. Every candle is a day. Let's not start freaking out. If you're an active trader, certainly you can trade the stocks. This is obviously a trading band between 128 and 110. You can certainly trade those 18 points or so. But generally speaking, let's not try to just be monkeys on a hot tin roof, in which case most of the monkeys fall off. Let's try to not try to trade every candle, especially on swing trades. Keep an eye on the price. Look at the patterns, get to learn how to read charts, take those ACS sessions, and you're going to make more money. That's just the way it is. It's quite simple. So this is it. Okay. So before I go any further, I'd like to answer, because look, I have a lot of stuff in my head, right? And so I just want to keep on rambling on. I want to basically address your questions on things. Oh, before I do that, let's talk about position sizing. Believe it or not, I have I've requested one of my older members who has taken small accounts to a very nice number, okay? And you're talking about a couple of $100, and he's got different accounts, but this one is one of his smaller accounts, to in the high four figures. Okay, so $1,000 up to like 10 grand or whatever or more. And I've asked his permission if I could sort of show, not his personal account, but how he did it. He did it primarily by trading off my alerts. He had a couple of his own ideas, but most of it, 90% of it, was simply uh, my trading alerts and charts and stuff like that. So once I get a hand on that, I'd love to basically walk people through it. And so one of the things that I always tell people, and he has certainly, and he's a long-time ACS Advanced Coaching Session member, one of the things very simply is he takes very small positions across the board. He knows how to read the chart, so he uses his own feeling and about which ones he wants to get in a little bit more, and it's worked out great. He also knows momentum trading, which I've always explained is the fastest way to make money. Just hit the pedal to the metal, the Nvidias, the Squares, those type of companies, and within 3 or 4 days, you have anywhere from 100 to 300% on your money. Now, do it with small amounts. Position sizing means you buy 1 or 2 contracts, and just run with it. Just run with it. So that's the simplest way you can do it. If you can't buy 1 contract of a call at, let's say, $2, which lands up going to 8, I don't know, what to say. So 1 contract at $2 is $200. Somebody with a slightly larger account can say, okay, I'm buying 1 contract with $2,000, or 10 contracts at $2, $2,000. Then we land up with $8,000. So position sizing means you have to take positions in different sectors. These things, don't come naturally. You have to position yourself in the biotech sector. You have to position yourself in the HMOs. Then you have a couple of these high-tech moves that move viciously, like the Rokus, the Facebooks, the Amazons, the Netflix, even the Apples. Then you have the periphery stocks like Nvidia, Micron, MU that haven't traded lately, but it's been going bonkers. The Squares. Then a couple of buyout plays on the tech side, like Symantec, we're sitting on. The calls are so cheap. So cheap. They're what? They're like 20 cents. The buyout happens, you probably sell it by Broadcom, you're going to sell it at 60 cents or 50 cents. Or even if you sell it at 30 cents, you got yourself almost 50% because average cost is around 20 cents. Then you get reversal trades that you can just throw in a little bit of money. Those are stocks which are moving off after earnings drop, like PSMT. That was sick. Those calls went from 10 cents, 20 cents to 25 cents when I told people to buy it, to a high, get ready for this, of $6. Ladies and gentlemen, that's 3,000% means 2,000% profits under your belt in 48 hours. PSMT, PriceSmart, there you go. Now the stock is really setting up. This was right after earnings, right there, on the 10th. What day was the 10th? Wednesday. Told you guys to buy it. Anyone can buy 25-cent calls. Those are extreme lottos. Okay? The stock reversed. The daily doesn't show the whole picture. There you go. Earnings. There were $2 here, or something like that. So earnings strategy, which is very key. I show you 4 earnings, buy 1 call each. If they're really expensive calls, don't buy them. Or if you want to do it. But I'll buy basket strategy. And fastest way to grow accounts, by the way. So this one, the other one, Helen of Troy, HELE, went berserk, right? Those calls went from 3 to 17 overnight. So stop being a spectator. Just what I'm telling you guys, Stop being a spectator. You're gonna buy 1 call at $300. Sell it at the open, which was around 10 or 11. That's 3 times your money. And then it kept on going. HELE. This one went the other way. So roughly from 2, it went down to 10 cents. So basically you lost your money on that. So if you had 1 call here at $200, she said, geez, it sucks, you lost $200. So fine. I started to see the reversal come about. This was after hours, by the way. This was the next day, Thursday. I see this candle developing. This is a hammer. This is sort of a red hammer reversal starting. Then I start to see this develop. This is the 15-minute charts. I said, bang, buy it. So 25 cents here. It started to really move. it goes to 40 cents. It goes to $1. I know the traders who did this trade, they were just losing it. So it goes to $1. Then a little bit of profiting comes down to 80 cents or something like that. By the end of the day, it is at $1.20. Now, this is the actual stock chart. You can actually track it on the options chart, which doesn't really look like a stock chart, but still. Then on Friday, it hits $6. $6. Look at it. This is the PSA Price Smart. Let me show you the actual options chart on this. Hold on one second. These are the 55 calls that I asked people to buy. 1 second. It's my other screen. So reversal trades, from a standpoint, there's many different types of trading, right? So you got to mix and match. It's not rocket science, okay? Believe me, it's not rocket science. And if you don't try it, you'll never learn it. And there's no one rule that things follow. So there you go. Try to fit this in there. Look at that. That's your actual options chart. Now, I don't trade off options charts, but I do show it time to time. And my Instagram account shows primarily options charts. Highlights of, obviously, Instagram is there for marketing, to get the word that Clueless Day Trading, one of the, honestly, we're like the most best kept secret out there, is there. And some of you have come through there, and I appreciate that. Definitely spread the word around. And so I show it there, but I don't have time during the day to keep on posting options charts. I mean, that's crazy. But look at this. It was zero. The low was 10 cents right there. Right? 10 cents here. 0.10. I didn't get 10 cents, obviously. And this is what happens. And this is what happens when a stock, 1 second, put it side by side so you guys can see this. And this happens a lot these days, by the way, just so you know. This happened with Pepsi. This happened with Pepsi, another one of our earnings reversal trade winner, because, bear with me, let me get the charts in. And because Pepsi fell after earnings. And then it started running like nobody's business over the next 2 days. And those calls went from 60 cents down to 16 cents to almost $3. You go figure, to $3. So the lottos are a great way also to build things. Now, some lottos not going to work. That's why we call it lottos. That's why they call it like a lottery ticket. So a little bit thrown in there can just make you extremely happy. So here is a prime example of real life trading. Stock starts to turn, this candle develops, and this happens. This is the daily chart. So let's look at the same 15-minute time frame. There we go. Now we're talking business. Okay. And I wish I had a lot more of this. I mean, how good did I felt? I mean, I felt good, but I wasn't there at 6. I was gone around like 2 or so because I thought that was just amazing. But obviously, some hedge fund was caught in the trap, what we call a monster monumental short squeeze. And those guys were just constantly covering, buy programs going in, buy programs going in, because their numbers weren't that good. Price Smart. So here was let me just do this. So this was after hours, after earnings. And you're going to see a lot of these, by the way, coming up. Earnings season starting full blast Monday, tomorrow. Get ready, guys, okay? Don't just sit around this time. Buy a couple of these basket strategies. Get blown up on 1 or 2 of them, fine. You got to do it. You got to blow up to really feel the power of making big money. That's just life. That's trading. That's serious. You gotta have some serious blow-ups. But earnings are a 50-50 gamble. But you can buy the basket strategy, and you're going to see a lot of these. That I can assure you, especially this earnings season. So crashes. So the options, yeah, we had bought it around here. I still remember like 2 or so. So they go to 10 cents. Stocks here. Next morning, market starts, comes down, can't go any lower, just takes off. Just takes off. Option when the stock goes from 50, these are serious reversal plays. Look at the size of this candle. That's the first short hedge fund which just either started taking their profits like right away because they're probably short the stock at 56. They just got a bonanza. They just made 7 points overnight. So what are they going to do? Just sit around? They start covering. They start covering. Again, I repeat, this happens a lot, both with the markets, specifically on earnings. Then the other shorts started to short the stock here probably when the stock was around 53 because it, okay, we'll short it. It's going to go down to 49. Well, didn't do that. Stock started to rise. The machines went full blast on the short covering side. Options went from the $1.50, $2 range by the time you break even. If you were sitting there and didn't dollar cost average, which I always ask people to do, always dollar cost average. Something goes from 2 to 10 cents, freaking buy a bunch more at 10 or 15 cents. Seriously. And especially if it's a reversal play, you got to do it. Because if you're sitting at 2, the minute it hit 2, you're out. You're like, oh, I got my money back. Thank God, there's a God out there. Okay. And then what? But if you bought it at 2 and you bought a bunch at 20 cents, 25 cents, your cost basis can come down to 50 cents or if not $1. Then as it goes break even at 2, you just doubled your money. Anybody who doesn't dollar cost average these type of tactical, high volatility, machine driven markets, in my opinion, is a full scale, old school idiot. I know other services will tell you, oh, you can't buy something that's down. Oh, that falls. No, it's always, one of the most stupidest comments I see on Instagram and on other services, sometimes on StockTwit, some people say, like, Warren Buffett said, rule number 1, never lose money. Rule number 2 is rule number 1. Like, what kind of, like, I don't think Buffett really meant it like that, but I'm not going to question, Warren Buffett, but that's the stupidest thing ever for a trader. What do you mean rule number 1, you never lose? Of course you lose. That's what sets you up to win 4 times over. Rule number 1, never lose. I mean, it's just so idiotic. And rule number 2 is follow rule number 1. Of course, you want to minimize your losses. You don't want to do stupid things. But if you do not dollar cost average, as you know very well, look what they did to the market. They took the market down viciously for about 3 or 4 days and then posted new highs after new highs. So what do you mean you don't buy the pullbacks? Important stuff for all of you guys, okay? And very important stuff. So anyway, so this is what happened. So the stock started to move, and this just took off. So this is a classic example of a monumental short squeeze where the stock goes to 49, forms a base. I don't know if it's a base, but the short covering comes in. I alert you guys big time. Buy it. Could have bought a couple of calls. You buy 4 calls at 25 cents. You tell me how much that is. What's 4 calls at 25 cents, somebody? Come on, you guys are options traders, right? Nazir, what's 4 calls at 25 cents?
100.
Thank you very much. So you put $100 here at 25 cents, and your $100 goes to $600. Okay? Sorry, not $600. 4 calls you had 4 contracts. 4 contracts. So 4 times 6 is 2,400. Yeah, $100 goes to 2,400. But forget about 6. How about 4. It goes to 4. That's 1600. How about just the same day when it went to 2? That's 800. That's on 4 calls. This is not the first time it's happened. Enough. So this is a classic example. You're going to see a lot of these. Act on them. Do the basket strategy on earnings and see the difference. And you got to be in it to win it, but you got to be in it, most importantly, to learn it. And once you catch the fever of doing these different strategies, you are going to love it. And these are simple. I'm not asking you to do some complex spread and all that stuff. Yes, we will do many straddles this earnings season, where you buy on the long side and you buy a couple of puts on the short side, just in case. And why big $1,000, $2,000 stocks, $500 stocks, those straddles work. If they're down big, boom, you blow up on the call side, and you make a ton of money on the short on the put side, and net you're up nicely. Okay. At this point, it's 10:45. At this point, let me answer some questions. Jill, you always have great questions, so go ahead. Shoot. Jill, you have any questions? Can everyone hear me?
Yep.
Okay.
Yep.
So, Jill, do you have any? I said this is the Q&A section, so please go ahead.
Sorry, I couldn't turn on my microphone. Can you hear me?
Yes, I can hear you loud and clear, ma'am. Please go ahead.
Okay. So this might sound like an amateur question, but
This is a
if
full
someone
amateur hour. Go ahead. Yes.
if someone purchases a contract for a lotto, okay, but at one point the same call was more money. Like, you know how the other day you posted it for the Amazon lottos for 2,100? So at
yeah,
one point those were more.
I can hear you getting cut off. At one
Can you
point
hear
they
me?
were what? You're going back and
At
forth.
one point they were.
Okay, you disappeared again. At one point what? Jill, are you there? We have a very bad connection here. All I can hear is the Amazon lottos at one point, then what? Okay, Jill, try to fix your internet connection, and then let me take the other question. Nazir.
I actually don't have anything right now.
Okay, that's not a problem, sir. I mean, that means you're absorbing quite a bit of things we're talking about, right? The practical
Yeah.
stuff. Yeah, okay, great. Serge.
Yes.
Yes, any quick questions that I can answer?
I have a question. When you mentioned buy programs and
Yes.
institutional buy programs, is there
Yes.
any difference?
I'm sorry, is there any what?
Is there any difference between the two distinction buy program and institutional buy program?
Yes. No. When I mention buy programs, I'm talking about large blocks of trade that are coming in. So those are generally run by institutions, which are hedge funds and mutual funds and other large institutions which are buying big blocks of shares. So when I'm starting to see big buy programs coming in, that can be that are institutional. That means they're coming from not from you and me. These are coming from the big institutional firms, which I can detect through my volume charts, and I also have a service that I use, which gives me a quick alert that those programs are about to hit. So this, for example, is a very large institutional buy program at 9 a.m. on Helen of Troy. You guys can always follow it by simply looking at the volume bars. On the ES, you can see that. That's on the E-minis. You get to see, remember, on the E-minis, the futures, you can detect these quite a lot. So let's say on the 15-minute chart, you can start to see the volume comes in, which are not hidden. A lot of stock volume is hidden. Not a lot, but a bunch of it. What does that mean? That means they trade in dark pools or private exchanges. Okay, these are private exchanges within large investment banks like Goldman Sachs, J.P. Morgan, Morgan Stanley, Bank of America. So they are away from our eyes. We can't see them. In the case of looking at where the machine-driven money is going, the best place to look at, oops, sorry, I looked at the wrong thing. I put ES, it's ES. There you go. You can detect it by looking at the volume. My charts obviously, start showing it like, before it happens. Can't do it every 15 minutes, but you can see that the surges that come in right there. So these are the great thing about E-minis or index future contracts is that they are not hidden in dark pools and private exchanges. These are showing up and reported on the Chicago Board of Options Exchange and other large exchanges, primarily the CBOE, Chicago Board of Options Exchange, and you can see that a lot. Okay, so that's what I mean. So that's the answer to your question. Jill, are you back on? Jill, are you back on? I know you had a bad internet connection. I would love to answer your question. While we wait for Jill, Mike, Mr. Murphy, anything that's going on through your head that I can answer?
Can you hear me?
I hear you loud and clear.
Let's see. Yeah, I was doing real well first week, buying a call on Amazon and then selling it at the end of the day, buy another one.
Okay.
Yeah, I began to realize that maybe I should have held it a couple of days because every morning it would pop up.
Well, that's because the market and the charts, Amazon's chart is extremely powerful. The problem with Amazon is if the futures in the morning are down, let's say 6 points, Amazon will open down 8 points, correct? So bottom line is the way one trades Amazon, because trading Amazon is like driving a 700 horsepower Lamborghini. Okay, if you gotta like handle the power. The trick with Amazon is that if you track the 1 hour chart, this is a daily chart. This is a complete bull flag on Amazon. But this doesn't do much if somebody's trying to trade Amazon on a 1 to 2 day basis. So this will give you a picture. This is telling us that if Amazon, the way things are going, it can bust through 2050, or it can easily fall down towards 1950 or 1967. Now the trick with Amazon to trade it on a daily basis is to use the 1 hour charts and the 15-minute charts, and I try to show them as much as possible. So and you guys need to do that on your own. So here's a 15-minute chart on Amazon. This was last Tuesday when I told people to buy the 1960 calls. I had actually told people to buy the calls back on Monday. And this is how Amazon traded. So it traded down at the open, and then it just took off. So if you see the 15-minute chart here, Mike, you're going to stick with the trade, and you are doing the correct thing in most cases where you're selling at the end of the day. Look, if you got money, sell at the end of the day. All right, because the way is you don't know what's going to happen the next day. That charts might look, but I did tell people straight out that given what we were seeing with the Fed Powell and stuff, and this is a lot of the background factors, that the market was going higher. When I'm saying uptrend intact, I mean uptrend is intact. It doesn't matter if we open down 6 or 7 handles on the E-minis. The uptrend is intact. So the 15-minute charts will allow you to trade it intraday. Look at Amazon. They smashed it on Thursday. See? And then they brought it up here on Friday. The real money on Amazon was made from Monday till then. But okay, Jill asked the question, so I'll answer that in a second. Use the 15-minute charts, Mike, for if you're going to trade Amazon on an intraday basis. The 1-hour charts on Amazon are for swing traders who want to hold it overnight. As you can clearly see, one second. As you can clearly see, the stock is on an uptrend. There you go, right? So the 1 hour is for swing traders. The daily is for people who believe on Amazon going a lot higher. This is certainly showing it wants to go a lot higher. If you notice, that's a bull flag. Doesn't mean that stock, so if it's a bull flag, okay? It's clear as day. So what's the bottom end of the bull flag? 1995. Where did the stock close at? 2012. So that means it's 5 and 7. That's 12 points from here to here. No reason to freak out as long as the bull flag is intact. Now, if they miss earnings or the prime numbers don't come right, the stock's going to drop real fast, 20, 25 points. Still, upside intact. But for options traders, they're going to be caught in that, and it's going to wipe them out, at least in the morning. So anyway, so that's the best way to do it. But the fact that you were doing it itself is a big plus. I am not happy with myself, to be honest with you, that I didn't run with it like the wind. Now, the way you do it as it's surging forward is you sell that and you buy a higher price call, a higher strike call. So the 1960s sold, like I said, 1980s sold that. Then buy the 2020, 2040, which I didn't recommend, which I think I did recommend 2040s. So those ones went up a little bit, but not that much. So does that answer part of your question, Mike?
Yeah, thanks, Frank.
Not a problem, sir. Okay, so Jill's question was this. Mike is not working. Okay, my question is, do you make less money on lottos? For example, Amazon had a lotto call, $2,100. Well, let me bring in this thing here. And everyone, please focus. All right? So she's asking here, so Jill is asking, if you guys can read, my mic is okay. My question is, do you make less money on lottos? No. First answer to your question, no. You can make a huge amount of money on lottos because you know what your downside risk is. Lottos are generally calls below $2, and the best lottos are the ones which are below $1. So do you make less money on lottos? No. But lottos are fast-moving options. Your losses are smaller because you're putting less money in it. They're cheaper, and your upside can be humongous. I just showed you an example of a massive lotto on PriceSmart from Thursday, Wednesday to Friday. Second question. For example, Amazon has a lotto called 2100. But at one point, that same call was more expensive. Does the lotto make less money? Okay, I answered the lotto make less money question before. Okay, so I recommended the 2110s. Bought a few, I'm going to leave it in there. And I noticed that they were actually moving. The stock, remember, is at 2012. It's $100 less than where I put out there, or what I recommended. Now, at one point, that same call was more expensive. It can happen. And this is a very good question, Jill. It can happen because what happens is the market makers, and now it's automated market makers, they are looking at, let's get the Amazon lottos here in the charts. They are looking at the volume coming in, and I'm constantly looking at the options table to see where the volume's coming in. All of you know that time to time, if I'm detecting, and I'm not an options detector, okay? There are people on StockTwits and other places where, who are just looking at sweeps and all that stuff. I simply look at some selective ones. If I notice a large surge of volume coming into a particular set of strike on a strike price on the call side, of course I'm going to go out there and let people know. But the options makers, Jill, they will look at volume coming in, they will look at the level of interest, who's buying at that strike, and they will at certain times, depending on the options characteristics, which you guys should educate yourself on your own, delta, gamma, and theta, which takes into account the intrinsic value of the option, which takes into account the time value of the options, and also takes into account the demand for that particular option, takes into account what type of stock it is. Amazon is a heavily traded stock by institutions as well as by retail traders, i.e. you and me. And then they will move the and the algorithms move the price accordingly. So that is why, Jill, that at one point the same call was more expensive than the Lotos, even though they were 2100s, and I recommend the 2110. So I didn't quite understand what you meant, that what the same call was more expensive, but I explained to you why these calls move. It's a whole different set of factors. You cannot sit there and say all the options move the same way. So I am going to pull the Amazon chart in. If my bet works, those $1.70 calls are going to, for a short period of time, if Amazon does blow through 2100, they could have great earnings for all you know throughout this whole mess with technology and the China trade wars and all that stuff. Those calls can go, you know, I'm guesstimating, they can go to $4, $5, $6 if Amazon takes out 2100. If it comes close to its 2100, then you can sell them. So I'm going to show you those here. So everyone please focus. So here is, Jill, can you hear us? I think your mic's not working, but you hear us because I just gave you the full explanation on your question. So here is the options chart for, here is the options chart for the ones that I recommended, and because the other ones, I'm going to recommend others too on Amazon because it's going to be in play big time this week. But these are the ones $100 out because Amazon's not cheap, right? You want to buy the ones closer to the money, it's going to cost you $15, $20. Like one contract would be $2,000. But I normally buy Amazon 20 to 30 points out of the money, anywhere from 10 to 20 to 30 points out of the money, 10 to 20 to $30 out of the money, what we call OTM, depending on where the stock is. When the stock on Monday was starting to come off that base and I looked at it, I liked it, I told you all to buy it. Those calls were the 1960 calls. The stock at that time was between 1930. The actual stock price on Amazon was actually, I'm going to get my board, which is much easier to understand. Hold on. So the stock was between 1930, 1940 on Monday, Amazon. Calls were around $6 to $7 for the 1960 calls. So I am buying it $30 to $20 out of the money. These are the strike prices. Strikes, right? So I recommended 1960, 67. These are the ones which over for 4-day period went to 70, but immediately within the next day, they went to between 15 to 20. So you could have just got out there, say, see you later. And that see you later, basically those $20 calls kept on going to 50 when the stock went towards 2000. So when the stock went towards 1990, they went to 50, then to 70. I would never be holding it like that unless, because what I told people to do is to move the strikes to 1980. Because if I have one call at let's say I have one call at $700, and that one call right now is 2000. Hey, smart to take the profit. Let's say I had two calls. I sold one at 2000, okay, and I left the other one. Now, if that goes to 50, am I stupid for not selling it? Of course I'm going to sell it and move to a higher strike. But let's say you say to yourself, no, I am not going to sell it. I put a trailing stop. That's the best way to do it. You put a trailing stop on a $50, because what you paid $7 for is now 50. So you put a trailing stop during the day of, or you just put a stop. Okay, but I use a trading stop of minus $10. In other words, if the option drops from 50 to 40, sold, your system automatically sells you out. If it jumps to 70, your trading stop is then minus 10. So if it drops, so at that point, if it drops to 60, sold. Do you guys understand this part? Using trailing stops on options, just the way you can use a trading stop on a stock.
I heard you couldn't do that.
I do that on my system.
I don't know how you put
Okay.
a stop on an option.
Of course you can. What I mean, all you gotta do, if look, call your platform thing. I asked you to use Thinkorswim. I'm sure E-Trade allows you to do that. If they don't do that, then dump them. Of course you can use the stop on options. Of course you can. I don't do it consistently, but many times on expensive options, I do it. Or if I have more than 10, 20 contracts, I'll do it. Of course you can. So make sure, yeah, Serge said I do that sometimes. You're just like me, Serge. I only do it sometimes. I use mental stops a lot. So, so Mike suggests you get on the phone with your platform provider on the trading side and if they said no, you can't do that, then bring your whole business over to Thinkorswim. Of course you can do that, and I'll show you. Then we'll wrap it up. So let's say, for example, one second, sir. Trying to get the order entry. Is everyone with me so far? Yes?
Yes.
No? Okay,
Yes.
great. All right, so look at this here. Order entry tools. Limit order. This is to sell. Hold on. What happened here? I guess this has to be live. Okay, here. See? There we go. Now wait 1 second, guys. Okay, everyone please focus. This is a selling 10 calls. Let's say I have 10 calls. Amazon. Strike price $760, right? Let's call it Amazon. Jesus, $2,000. What a company. Let's call it 2,100 calls. No, those are too cheap. Let's say 20.50 in the middle. Perfect. Those calls, oh, they're $5 only? Jeez, I like it. Let's call it 20.40, $9.80. They're $10. So I can basically say market order, I get sold out right away. Stop, stop limit, trail stop limit. Am I clear on this? Mike Murphy.
Yes, thank you, Frank.
You gotta trade on Thinkorswim. I'm telling you right now, for your own sake. Gotta open that account, gotta put a little bit of money in Thinkorswim, and just do it. See that? Market order, limit order. That's to buy and sell. Limit order to sell if you know. Stop. Stop limit, trailing stop limit. I use trailing stop. So there you go. You can do that with a stock. You can do that with options. This is an options. And I suggest if the options are more than $10 a piece, use a trailing stop sometimes, because it's just, you know, market goes nuts. You don't want that 10 to go to 2. Put a trailing stop at 8. If you get taken out at 8, you lost $200 instead of losing 800. And then you can get back in again. So, any other quick questions before we wrap up? Jill? No? Okay. Sounds good. I will see you guys or some of you at tonight's session. This was extremely helpful, I'm sure, to all of you, and it's always a pleasure interacting with you guys. You guys are the best, and I look forward to working with all of you on the advanced coaching sessions that I'm already doing with some of them. And like I said, it's mental, but the mental part of this trading business will not come naturally. I'm just warning you, all of you. It will only come through trading these tactical charts, taking positions, trying out different things, using your own gut feeling, but it won't come naturally. And most importantly, and one of the most important aspects, like I always say, is this time that I take on this amazingly beautiful summer weather in the morning to do this before my day starts and I start to do some stuff with my family. It's not there to benefit me, it's there to benefit you guys. So sooner than later, the people who are not doing the group ACS advanced coaching sessions, that's what's going to help you to move to the next level. So feel free to sign up and stuff so I can schedule it. I do it sometimes on weekdays after 7 p.m. and weekends, early Saturday, early Sunday. Have a great morning. See you guys tomorrow. It's going to be an exciting second half of July.
Thanks, Frank.
Good afternoon, I should say. Thank you. Bye-bye.